Secondly, is the fact that you have been able to deal with the issue of massive premium and arbitraging that's happening in the market between the official and the parallel market, as we call it. So once you break down the series of cartels that build up premium in the market, and you bring transparency into pricing and price discovery and market disclosures, and prices the premium between the official market and the parallel market is not that wide. It takes away the interest and the motivation for people to want to continue to store currency for as investment edge in their homes. I mean, they become non-productive when you store them anywhere else other than put them in the financial services system. So all those will be out of the way so that people can put their money into productive use rather than storing up currencies for whatever benefit that they think they get. So I think that's very important. And lastly is the fact that there should be more disclosure and transparency in all of this. Well, capitalization is good when it's needed, especially when most of the time you see the direction towards recapitalization or capitalization, as the case may be, as a result of volatility in the economy. So the banking sector is supposed to have the capacity to be able to absorb the shocks that may follow economic crisis, volatility, which is global, right? But that has to be planned out properly. We've received, the central bank has recently provided a guideline as to the kind of capital raise, that is capital requirement for different categories of banks, moving, for example, international banks from, I think, 50 billion now, they are going to, 100 billion now to 500 billion. Commercial banks are going to go from 25 billion, national commercial banks are going to go from 25 billion to 200 billion. The regional ones are moving 5 times more, from 10 to 50. Merchant banks from 15 to 50. Non-interest bank also the same way, they are moving maybe by double. And then an introduction of a regional non-interest bank. Of all these may be useful in terms of building a robust economy. However, it's always important that we lay the mechanics and the optics that should govern this kind of event. Its capital raise or recapitalization is good in itself, but as to the need for it, we need to define that. So, for example, what are the governing philosophies and the underlying reason for this? Yeah, you have volatility in the economy. Would it be required as an industry thing or as a selected bank thing? But this is turning out to look like an industry thing. And in my view, I don't think that helps the country in terms of wanting to enhance the capacity of the entire economy. And why do I say that? Today, our currency is trading at about 1,300 to $1. If you take the biggest commercial bank or the biggest bank today in the US, JP Morgan, its total balance sheet today is about $4 trillion. That is, and they are selling at about, their shares about $170 per share, thereabout, or a little more. They are paying dividends of just about $4 in a year, right? If you take a GTB, for example, GTB is about 15 billion. That tells you that JP Morgan is about 230 times the size of GTB. But GTB pays, if you look at that, $170 is about 221,000 naira, right? And 221,000 will buy you GTB shares of about maybe 5,000 plus, almost 6,000 shares. and GTB is paying maybe about 2 naira. So GTB will pay times 2 in terms of dividend of what JP Morgan will pay on dollar. So that shows you that a bank that is like the number 1 in America pays bigger than GTB by more than 200 times, pays less dividend than GTB. When you consider, again, like looking at the top 50 banks in the US, BOK Financial Corporation is the 50th. They are still bigger than GTB, I think about $50 billion. Their dividend, their price is about $92, which is equal to about 120K, right? That will buy you about 3,000 units of GTB. They pay about $2. GTB pays more than $4. So if you consider this, when you are doing recapitalization, and in the way it's being considered now, you are generally going to sell Nigerian banks for cheap. So foreign portfolio investors can come into the country and double their money very easily. Now, when you face that kind of situation, the challenge is that you find influx of dollars, and by the time they want to repatriate, remember our system is largely open source. We don't have capital control like that. By the time they want to repatriate currency or they are selling down, it will affect the share price, it will affect the economy in terms of the dollar demand as well. So it's important that we look at the whole system, because each of these banks, given what the banks will be raising, if they all pursue this process of raising new money, because there will be very few room for M&A, at least among the top big banks, the top 10. So there will be limited need for M&A among the top 10. So the top 10, from the numbers we are seeing, will need to raise about 2 trillion. So if they are raising about 2 trillion, that shows you that already we need to raise part of that money from outside this market. We're not talking about the other subset of banks, the regional ones that are also going to look for capital. Of course, events of M&A may happen. So you probably will be looking at raising close to 3.5 trillion in new capital, which shows you that we're going to have to go outside of the local environment to look for this. So eventually, asset managers outside of these shores are going to buy a lot of banks for far lower value than they would do abroad, for banks that are paying lesser dividend, even though they are bigger and more expensive. Now, the second challenge I have is the fact that the recapitalization is not considering taking into cognizance the retained earnings of banks, on the notion that, they want to make sure that there is a lot of transparency, the risk, and all of that. And I asked myself the question, the CBN annually conducts at least 1 or 2 examinations across these banks. Part of the examination is to check their income, check their operations, and all of that. Aside that, they check the accounts. The accounts are submitted to the central bank to review the performance, and they check all the numbers. So if you then, on the basis of whether it's risk or on the basis of the fact that, you feel like you are concerned about the authenticity or credibility of the numbers, so what is then the underlying reason for the annual or routine audits or examination that you undertake? What is the need around the banks submitting their accounts for the approval, review and approval of the central bank? So it queries the operation of the central bank.